Everyone, welcome to Legacy IS. So, our topic for today is this: SpaceX, OpenAI, and Anthropic are set to go public. Will it make AI companies more transparent in how they regulate themselves? This is the topic, fairly simple. Okay, so first we'll understand that what is an IPO, why they are going for an IPO, okay, what are the risk and advantages of this, and then we'll see some MCQs also. So let's get started. Now, first is this. What is an IPO? See, IPO is initial public offering. Correct. So when a company is getting listed on a stock exchange, the first time it is listing its share on the stock market, that is called initial public offering. Correct. Now IPO has become so famous in India because of all these startups going for IPOs. So you do understand that this is the first time it is coming on an exchange. Now IPO is the process through which a private company offers its share to the public for the first time and becomes publicly listed on a stock exchange. Correct? Then it allows companies to raise capital from the investors. So usually they are taking venture capitals and all that is still going on. Then if they want to raise more capital, okay, or if they want something known as exit for their initial investors, they go for IPO. Now, after listing, ownership is distributed among founders, institutions, and public shareholders. So, usually what they do, they decide a quantum. For example, they will say that 10% of the company we are sending for IPO. Correct? So 10% shares of the company will now be listed on, let's say, some stock exchange, let's say London Stock Exchange, and there all these people, the normal people like you, me, or anybody can buy and sell them over time. Correct? Now, why are major AI companies moving towards IPO? Now, of course, they don't want to distribute wealth or anything like this. See, most IPOs essentially are to get money from the market, okay, from people from the market, and provide it to their early investors. This is the core thing, okay, whatever they say. So right now they are trying to raise, if I want to raise, let's say, like a few $1 billion, now it is very difficult to find like one venture capitalist or one firm from which I would be getting all the money. Correct? So you can go for IPO, and from that you can get a lot of money. So capital requirement, main cause: training and advanced AI models require enormous spending on chips, data centers, electricity, and talent. Scaling infrastructure, correct? AI companies need long-term funding to expand computing infrastructure. Once you go for IPO, then you can release more shares, you can constantly keep on getting more and more funds. Then investor exit. This I have already talked about. Early investors and venture capitalists get an opportunity to monetize their investments because they bought at a very low price. Let's say they bought at 20 rupees. Now in IPO the company goes for 100 rupees. Correct? So they can sell their shares immediately and they can get 80 rupees out of it. Correct? Then market credibility. So public listing increases visibility and market presence. Correct? It also comes with a lot of compliances that we'll see, but it also gives, like, the public perception of a company grows because of this, that this company is now stable, it has gone for an IPO. Then how can IPOs improve transparency and accountability? Very simple. See, once you go publicly listed, that means the public can invest in your company. If the public can invest in your company, this is a matter of public interest. If it is a matter of public interest, the government will impose some regulations on you. Understood the whole flow? So, mandatory disclosure of financial performance, risk, and governance practices. Then, greater scrutiny by regulators, investors, and shareholders. Correct? Now, you might have seen those CNBC Awaaz, okay, or Z Business, all these channels you must have seen. So there they are always talking about publicly listed companies. Correct? So they will talk about that. How is Tata Motors doing? So then they will talk about that. How is their finances in the last quarter? Everything you have to publish. So it leads to more and more scrutiny of your company. Now it is good also. It is bad also. Okay. Now increased pressure to disclose AI safety, cyber security, operational risk. Now they cannot say that we are trying to develop the best model, because now the public is also invested. So the regulations will demand, and the higher scrutiny will demand that they tell more about the AI safety methods that they are taking, cyber security, operational risk. All this should be laid bare in front of the public or in public domain. Possibility of legal action if material risks are concealed. Correct? So this is also possible. Then, is public listing sufficient for AI governance? Not really. Why not really? See, IPOs are mainly a financial exercise. Correct? So IPOs improve disclosure but cannot fully address ethical and societal concerns. Correct? It will be mainly about the economics, that this much money we are putting into this, that this much profit we have generated, this much is our revenue. All those will be scrutinized. But if you talk about the ethical and societal concerns, very limited responsibility because of IPO. Okay, IPO will not cause that responsibility. Then many AI risks are long term and may not be immediately affecting company profits. Then dedicated AI regulation, safety standards, and international cooperation still remains necessary that are focused on AI safety. IPO is not going to solve all these issues directly. Understood? Okay. Let's do two questions and we'll be done. Now, with reference to an IPO, with reference to an IPO, consider the following statements. An IPO enables a private company to raise capital from the public market. Yes, absolutely. This is what IPO is. Then, after an IPO, the company becomes subject to disclosure requirements imposed by securities regulators. Correct? It becomes subject to disclosure requirements. Yes. Then, in fact, like in India, it is sometimes said that because of IPO, now we have to release all the documents. Earlier, they didn't used to, unless they have taken some institutional investor. From some random person, they have taken money. So, you won't be able to scrutinize that much. Then, existing shareholders are prohibited from selling their shares after the IPO. Now, this is the main thing why they are doing the IPO. But there is something known as lock-in period. So the existing shareholders or even the founders may have some lock-in period. In this time, they won't be selling the shares. Otherwise, there's chances for simply gaining money out of the people's. So basically, now let's say people buy at 100 and immediately they start selling it. Now what will happen? Suddenly the price will collapse. So all the people will lose money and the investor will gain a lot of money. So usually there is a lock-in period after which they can sell. So existing sell shareholders are prohibited from selling their shares after the IPO. No, only till a lock-in period. After that, they are free. Then, so answer becomes what? 1 and 2 are correct, 3 is incorrect. Answer is A. Next. Yes, with reference to concerns associated with AI, with frontier artificial intelligence companies, consider the following statements. Concentration of AI capabilities in a few firms may create barrier to competition and innovation. Yes, this is why we have competition commission and all that. Correct? Only few companies, if they hold all the power, it can be a barrier to competition. Then, advanced AI models can potentially be exploited for sophisticated cyber attacks. Yes, in fact, it has started being done. Correct? AI models being used for cyber attacks. Essentially, they can automate almost anything. Then, greater reliance on AI systems may amplify biases present in training data. Yes, this also we have seen. One of the UPSC statements this time was unbiased output. No, if the training data itself is biased, then the AI will also give biased results. This is correct. Then, public listing of AI company automatically subjects their algorithms and source code to mandatory public disclosure. No, not their algorithms and source code, only their business aspect. How much they are earning, what are their revenues, what are the quarterly profits, whatever, all those business things, not their source code. Okay, not their algorithms. correct? That may be proprietary to them. They won't like to share this. Otherwise, somebody else will also do everything the same way. Of course, there are other stoppages, but this is incorrect. So answer becomes 1, 2, and 3. That's it for this video on these new companies or these AI companies that are going for IPO. That's it. Thank you.